Hello everyone, petar.jacimovic here from vicofanalysis.com. I want to post, as I promised on the stocktweets.com, that the post and analysis which got most comments, I will do the update and do the video explanation and the reasons for my analysis. So the most comments here got my analysis about Apple, and people are pretty much asking why why it's a weak fundamental, why I think that this can go lower, and why I think that there is a big risk for the buying side of the Apple. So as you see, there's a lot of comments there, and I want to start my analysis and explain you the reasons why I think. So I will do this again for every analysis which got most comments. I will do the video explanation about that and explain and see to answer the comments and what you got there. So basically the Apple, if we speak about the Apple, it's one of the leaders in the industry group, and currently it's trading at 117.30. Let's start with fundamentals about the Apple, and later on I will go to the technical analysis. Basically on the stock market it's 50-50%. 50% is fundamental, 50 is technical. You must have both confirmation to build any position. Right now I speak about the mid-long term perspective on the Apple, and the reasons why I don't understand why the people think that Apple will go much higher or something like that. First of all, if we go to fundamentals, this is from you watch from the left side, the EPS share last quarter is 38%. 38% is my minimum is around 25%, but 38% is decent last quarter if we speak about earnings per share. If we speak about the 3-year EPS growth rate, it's a 14%. That's not very good at all. So this is what I don't like at all. 3 years growth rate, it's very low. For the current year, earnings per share estimate 7%. It's very weak. Return on equity is actually good, 46.25%. Sales last quarter is 22%. It's even below the minimum. Usually minimum is 25 to 30%. The last quarter, and 3-year sales, its growth rate is also 13%. This is a not very strong fundamental at all. You know, it's there, except the return on equity, earnings per share, it's not good. 3 years EPS growth rate is only 14. 3-year sales growth is only 13. You know, so that is not good. But most important thing is also about the EPS. It's EPS, earnings per share acceleration. This is by quarter, so we got 143 to 3.08. That's a very good increasing in these quarters here, and then we start decreasing from 3.08 to 2.34, and then to 1.86, and most recently 1.97, slightly better just than the quarter ago, you know. So this acceleration because the most important fundamental aspect for the stockholders, for the shareholders, pardon, is actually earnings per share, and then we get the growth, we get the return on equity, we get the institutional sponsorship, and so on. So basically the acceleration EPS, if it's bad, and this is the bad example, this is not good, you need an increasing per quarters, you need a good quality increasing EPS acceleration by quarters, you need a big numbers. When I said bad fundamental, I mean you know, the good fundamental is something which got, for example, EPS share like 60, 80, 100% or more, you know, percent in the last quarters. Acceleration must be also very good. Sales must be, you know, I like to be like 60, 80% or more in the last quarter. Also to have the consistency in the sales, you know, per quarter. So this is what is good fundamental. This is weak fundamental. And right now we go to the institutional positions here. We have the 1,211 increased position with total of 80.83 million shares, and we can decrease position about 1,052 positions in total amount of 205 million shares. So much more we got a decreasing in the institutional money here, which is also very important if we speak about fundamentals. So you have a lot of bad things here about the fundamental. There is some good things like return on equity, but from the other side, the major things like earnings per share, 3 years growth as well, sales growth rate, and institutional sponsorship, they're looks very, very bad. But about the fundamental, it's very, very weak. It's positive, but it's not good at all. It must be much stronger if you want to see the much higher prices on the Apple. So this is not a fundamental to move any bigger push for with this statistic here and with these reports during this year. Now we got the technical, which is also not confirming any further buying, because as you can see, we created strong trading range here. We got some buying climax there. We got the uptrust. This according to the Wyckoff analysis. Since I'm doing the Wyckoff analysis, again, I'm a professional analyst. For 8 years I'm doing the Forex, but I also traded for investors the stock, and I'm investing for myself in the stock, the New York stock. So here we got a big trading range here, and as you can see, we got a lot of wicks here. If you go, you have 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, and about 20, 22 wicks in the trading range, and then very strong breakout here, and this is a very strong sign of the weakness. And price dropped all the way from around 134.70 all the way dropped to 92.80 per share. We got a sign of the weakness at that stage, but we got a shake out and price back into the trading range here. But for example, look at this bar here. It's a very it's very low volume, and look at the bar finishing in the middle here, and that caused the price to go lower, and we dropped from here 123.92 all the way to 112.34. Then we got push up, but also volume below the average and lower compared to previous two bars, and now we are heading lower. Also, this is a big point of control here where the price stopped, and we may really expect retesting of 111.11 and later on to these swing lows here. This is classic distribution here. We started distributed, and this is a big warning for any shareholders who still invest or adding new positions into the Apple. So you must watch the reality, and the numbers what we got here. So if we go to the daily, this is a weekly time frame, by the way. If we go to the daily time frame, you can see pretty much what we got yesterday. For example, it's a very, very weak demand. Look at this bar here. This is all weak demands, all weak demands at this stage here. Look at, for example, this one also finishing on the middle. There is no big demand at all. It's a very, very vulnerable market, and you don't want to be, and that's why I alerted people to be traders to stay out of buying the Apple, because it's just not it's not fundamentally good, it's not technically good. You want to buy something which have the very, very big earnings, very good EPS acceleration, very good sales, and so on and so on. This is not company you like, and technically as well, this is where this distribution started, and then this is just retesting of the this cluster here and point of control. So this can easily go to 110.90, later on 107.21, and probably also will try to go to here to retest 92.62. Again, I don't have any positions on this. I just posted advice again to alert you about my view and the reasons why I said it's a weak fundamental, because strong fundamental looks like far and much better than these numbers. These numbers are very weak, except the return on equity, which is good. Everything else is pretty much very tiny. How to say that? Very tiny. Acceleration is very bad. EPS acceleration, which is one of the most important things if we speak about the fundamental. So generally, to push this higher and to back to the trading range, or to even go to the highest high point and go and break the 134.90 area, you need massive good you need improvements in the company, you need the larger sales, you need the earnings acceleration to start to increase, and then I can say that we may expect higher. Right now this looks pretty bearish, you know, and very risky for any buying in this company. I don't speak about the intraday trading, I speak about mid long term investing. This is right now not good at all. So I hope you enjoyed this analysis, and again I will post the video my video explanation on the most commented analysis I posted on the stock tweets, and I will go through the explanation on that. Okay, so also here you can also spot, if we speak about look at the trend line here, you know, price reacted here, and look at right now this trend line. Just I will show you here. I will show you here. This is here. This is broken and retested here, and not just that. I will zoom in again. We create the lower swing highs, which is classic sign of the weakness. You have this swing high, and then this is confirmed lower swing high, and also this is the lower swing high currently active at 123.80. So you don't like to buy something which have the not so good fundamentals at all, technically also very bad, you know, and also you don't want to buy something which is going downward. You know, you like to buy something which is healthy, which is out of the base, which is making the new highs, or which is going out of consolidation, or the trading basis onto very strong fundamentals. There is plenty of companies which have the amazing fundamentals together with technical. So buying the apple at this stage looks very dangerous. That's it for this analysis. I hope you enjoyed, and I wish you good trading, and feel free to follow, to subscribe on Stock Tweets as well. You can follow me on my YouTube channel, since I started again to cover also stock instruments and to cover companies. So I hope you will enjoy my analysis, and you can also create potential further cooperation and so on. So bye for now, and cheers.